Ladies and gentlemen, K Kim here. Welcome to the market update, the weekend video. Today is the last day for this week's trading. Tomorrow's market is closed, and so we're going to be doing a little bit more extensive analysis today. We will be covering Spider and trying to figure out what we can expect going into next week. I've asked some of my followers and YouTube subscribers to give me some tickers so I can go through. So these are those ones that I've depicted, and also these are the ones that I see more people are requesting multiple times. So SQ, Crowd, NVDA, Shop, Spot, AMD, DOCU, FDX, Alibaba. So those are the ones from the request tickers from last night throughout today. Those are the ones we're gonna go through this evening, and of course we will follow up on gold, and we'll end the video with the Bitcoin analysis. So it's all coming up right now. So market is up slightly. As you can see, S&P is up about 0.5% there. You can say that that's not a huge deal, but as we've been, talking about, and we've covered this intensively, yesterday, and, I mean, comprehensively yesterday, what buyers needed to do, right? You can go back and check the video from last night. Daily video. I spent about 20 some minutes to explain in detail what was going on as far as overall trend is concerned, right? So this is exactly what the buyers needed to do, right? Coming back up here, first of all, there was the island gap that was filled yesterday. We gapped up today. It was another scenario I given you yesterday. I mentioned that this market's been performing surprises. So we were anticipating possibly, buyers being tired. But just because we had a little bit of energy left, this is what, we talked about yesterday. Because they got a little bit of energy left, there's a good chance, there's a rare chance. But because this market has been doing that, I thought it was worth mentioning, possibly seeing another gap up and push. And you might say, well, okay, yeah, we gapped it up, but we got right back down. It's not a biggie. It is not a biggie. However, you have to understand the cultivation. What the buyers have established with this move. Yes, we fell back. And our gain, the S&P's gain for the day is only 0.5%. That's not huge. But what they've amounted, what they've cultivated with this today's move is actually huge when it comes to trend perspective. If you recall what I talked about last night on the video, I said we have lower highs, right? Talked about it is very important for the buyers to continue higher and nullify, neutralize this downtrend selling pressure. How though, right? We talked about yesterday how. Because if we fall from here, that is going to be yet another lower high, right? You remember here to here. That was a very, very subtle, right? But that was indeed a lower high. From this high to this high, that definitely was lower than this high. So you can see that this market was continuing to, cultivate lower highs here. And despite the fact that we did see a pullback, it is a good accomplishment for the buyers in the midterm. In the short term, things are looking a bit more bearish, but we have a lot of supports that bears need to go through, which we want to talk about. But I want to first establish the fact that you can see right here, price got up here, tagged the that reversal gap, the island top reversal gap. With that, we no longer have lower highs. We now have equal highs here. You see that? We're no longer in a downtrend. If anything, we're more in a neutral ground, meaning the market is trendless. We're not in an uptrend. Looking at things as short to midterm. We're not in an uptrend, but we're not in a downtrend either because of what happened today. For a while, we were in a downtrend. We were in a downtrend for a while, as you can see, right? With this price up move, now I have to categorize this market trendless, consolidating market, short to midterm. So as of today, how am I going to label this, right? As of today, with the data that is at hand. Short term, I'm giving it bullish. Midterm, I'm giving it neutral, just flat neutral. No neutral to hectic environment. I think buyers need to fill this gap. I think that's going to be the next task. So buyers been getting up, filling this gap, able to get back up to then take that, right? And kind of got back up to this high here. So they have accomplished a lot. And next task for the buyers will be maybe potentially a pullback or something like that, and then getting back up and filling this gap, right? So now that price is well above my short-term moving average, it is well above my mid-term moving average, it is well above my longer-term moving average. My mid-term moving average is now curling up. In a normal circumstances, in a normal climate, I would label this price action bullish in the midterm, right? You guys remember, back in mid-May, late May, when my midterm moving average was rising like this and price was well above my short-term moving average and my midterm moving average, I was giving it, I was labeling it, I was categorizing this market bullish in the short term, bullish in the midterm, and bullish in the long term, because my long-term moving average was also rising. You guys remember that? So, in a normal circumstances, that's what I will do. Bullish short term, bullish midterm, bullish long term. However, we still got this gap. Once this gap gets filled, I'll give it all bullish sentiment in the midterm. So in the midterm, I'm not giving it bullish yet. I'm giving it neutral. Neutral because of this gap still remains open. And bears obviously need to protect that gap and maybe trying to find some kind of a pressure to the downside from that point on. But for this trend, for this base to be dismantled, the bears had to get below 297, below 300, 297. And that's a long way to go at this point with all of my all of my moving average, rising at this point, right? So remember, when you do your analysis, you always do your analysis based on what you see in front of you, right? That's what we've been doing. You go back and check every single one of my videos. We've been doing it every single day. I've always done analysis, what I see right in front of me, not that what I think it should happen, what I think why we shouldn't be up here, right? Instead of fighting why the market shouldn't be up here at 312, why market should be at 220, instead of fighting like that, you just accept the fact that we are up here, accept the fact that there is some bullish momentum this week, right? And things can change going forward. That's why your job is to continue to analyze this market on a daily basis, because each day this market is going to give us just a little bit of information for us to continue to extend and advance, right, with our strategies and things like that. But anyway, so, we now, you can see now in a micro term, very, very short term, there's some bearish sentiment there. We got that shooting star candle, and that has been confirmed by not getting above that level, that shooting star candle body. And then next, the last hour, we did see a fade. So that's a micro term bearish, just today's price action. However, this gap still open. this gap still open. We got 2 up gaps still open, and those gaps will provide as support when the price come back down and fill it. Probably the best bet for the bears going into next week, maybe Monday and Tuesday, we probably gapping it down, maybe turn that into an island top again, because they did that here. There was a gap up here, and then there's a gap down, and from that island top, you saw that very, very fast down move that came about for about 2 days. So that's something that maybe bears wanna play. That's something bears are looking forward to seeing. But if we just continue to drip lower, we see a slight gap down or something like that, where we get a little bit of gap, we get a little bit of move and then start pulling back, we're gonna see this level acting as support, 310. My short-term moving average is hanging out in that vicinity. If we continue to lower, we got another support at 308. We got another support at 306. All this vicinity is gonna be a strong support. Right? So we'll have to come back next week and we'll have to re-examine the situation. Let's check out that oscillator and see what's going on right now. We talked about this exact scenario last night, didn't we not? This thing breaking above this resistance, pulling back, potentially acting as support. So not only we have these gap areas gonna act as support, we got that short-term moving average also gonna act as support. We got horizontal supports there, but we also have this this oscillator retesting prior resistance, right? It might come down, somewhere in this vicinity, and there's a chance this thing could have another whoomp of a move, right? And this is that setup. This is that setup that we saw these before. Yesterday I demonstrated that we saw this, I don't think around in April, right? And if this thing bounces from here and gets back up, that will be something like this thing coming down, maybe filling this gap somewhere in 309, and then getting up, filling the gap at 320. By the time we get there at 320, that's gonna provide pretty solid, strong resistance at 320. But by the time we get there, the oscillator is going to start to get a little bit gonna be hanging around in that overbought vicinity. Also, what I like to call the oscillator double top. This is something like this, the oscillator double top, right? So there could be another push sometime early next week, either Monday or Tuesday, and that's gonna get us to about 320, right? If we can find support in this vicinity, and then with that, my oscillator is gonna get to that overbought level once again and throw that oscillator double top, and with that, we may see a pullback, and we have to come back for that. We have to come back for that, but that's kind of what I see potentially happening early next week, right? So we'll prepare for that. Let's get a quick look at the daily chart. Let's follow up from what we talked about last weekend. Last weekend was, the price was something like this, right? This was what it looked like last Friday when I did the video. It was sitting right at 305, and you can check my Friday, last weekend's video. We talked a lot about this pivotal level, right? That 300 level, right? We got that rising pivot. We got this rising pivot. We also got those moving average clusters all in that vicinity, not to mention the gap area, right? And that was Friday. This was Monday, Tuesday, Wednesday, Thursday, right? That's what we talked about. And I want to be fair with my analysis. I didn't, you know what I'm saying? The thing about these potential support levels is you never know, right? I couldn't say to you guys on Friday, yeah, bro, 100% guarantee, man. Mark my words, dude. It's gonna go back up 320, bro. It's gonna get up there. I know for sure. None of us can say that when it comes to market. But when you see the market getting into, this level where it's colliding with all sorts of support levels, two of my rising pivots, all of my short-term moving average, my mid-term moving average, and the gap area, there's a very, very high chance we're going to find support. I also gave you a potential scenario. We might even come down to about 295 to fill that gap before going higher also, right? But that's where we found support. And that's kind of what's been going on the S&P, where it found support where, likely scenario, even back in mid-May, a lot of commotions back in mid-May. A lot of people are feeling very bearish because this thing came down pretty hard. But we talked about my midterm moving average here. You can go back and check May 14th video. We're going to give benefit of the doubt. Same thing here, that you see that blue dotted moving average. It has impressive resume. Here, support. Here, support. Here, support. Right there, support. So that's where we got to last weekend. And nobody knows. Maybe this time is different. But remember, when you do your analysis, your analysis based on what you see in front of you. So that was Friday. You're like, okay, well, as of Friday, we are staying right there. So see if we can see some kind of bounce on Monday. And we saw that on Monday, and we've been analyzing on a daily video every single day. And we looked at that bullish divergence. Once we saw that bullish divergence, you guys remember this? That bullish divergence right here. We knew at the time my oscillator is going to go all the way back up to at least to maybe this resistance and back up to overbought level. Remember that? So that's kind of what I mean is each day this market is going to give us a piece of information, and our job is to analyze that and utilize that information to potentially forecast what may be coming, what is a high probability of scenario going forward, right? So just like I said, I think buyers done a good job here coming back up here, making this into yet another consolidational pattern, right? Something similar to that. And we talked about yesterday, that's how buyers like to operate, make a move. They like to digest that gain, and it takes its time and then wait for the right opportunity for another up move, right? We see a big move, we pull back, digest that gain here, right? And then wait for the right opportunity before potentially making another leg run higher. And a lot of times that's how bullish trend, overall trend, that's how they make its run, right? There are times where market could go just up and down like that, but especially with a lot of commotions, what's going on, with a lot of fear still lingering around overall with the COVID-19 and different economical data that has been coming out, it's you know what I mean, there's still a lot of fear, and with that I think market has been holding up these gains very well. We haven't seen any kind of crazy shenanigan, you know what I mean, volatility. We did see some big downside move here, but you see how quickly bulls brought it up and just absorbed it. If bulls didn't do this here, think about this downturn and this downturn, right? If there was no big move here, it would have been boom and boom, right? Because it was this downturn and then another downturn, correct? So if there was no gap, big move following days, this move right here, this one and this one, then it would have been down and then another down. Instead, bulls brought it right back up, and you see how every down move seems like there's that green candle in between, right? Red candle, green candle, red candle, green candle, red candle, green candle, red candle, green candle. Why? Bulls are absorbing volatility, right? And it makes the market, makes the price kind of stay sideways. And the longer you let bulls hang around, right? You let bulls hang around like here, here, and here. Especially in an uptrend, especially in an overall uptrend like we're in now, right? We are in an overall uptrend, correct? Because we're in an uptrend. High, low, higher, low, higher, low. So you let bulls hang around, then they're sooner or later going to bring it up, right? So I think, like, looking at this daily chart also, I think, that moving average is going to be key right here. That's my short-term moving average on the daily chart. That's kind of the key level. There's some gaps in this vicinity, potentially pull back and hit that and then get up, or we may just get up right away. We don't know that. We'll have to come back on Monday, reassess the situation. Let's go to SQ here real quick. Square. I still own Square. I've actually analyzed this before, back in, I think, in April. I closed out 1/3 of my longs at around 105 or something like that. I'm still holding rest of it, but this is the position that I went long right here when it cleared that prior resistance, new support. You see all my moving averages hanging around in that vicinity. So that's where I accumulated like my longs. I held it, closed 1/3. I'm holding full at this point. Obviously, we are overbought. That thing just went straight up. You know, just for my time frame, I'll never go long right here. This is not a level that I'm gonna go long here. I don't know where the top is either. You know, I look at my oscillator, it's overbought on the daily, it's overbought on the weekly. It seems like we're in that territory on the 65-minute chart also, right? So when stock is moving like this, it's very difficult to call top. What I mean by top is people think that this thing is gonna come right down to maybe back here. That's the most, we talked about this before, that's the most difficult endeavor to try to profit off of this. So I don't recommend shorting on this. It's a very, very short term day trading or scalping. But I wouldn't also recommend going long here either. If you've been already long, you can trim some, but hold some also, just because, I mean, you know, people thought this, oh, that's up too much. Oh, it's up too much. Oh, it's up too much. Oh, it's up too much. Wow, that's really up too much. We don't know. We don't know where the top is. So if we continue higher, what I will be doing is I'll continue to trim my positions. That's what I will do. I would think about going long maybe if we come back down to maybe somewhere here, like somewhere in this vicinity, about 90-ish area. Maybe if we retest a midterm moving average. If we go down there, what I won't do is I'm not going to short it here and try to ride that down because I don't know where the top is. I'd rather wait. And if we don't see it, that's fine. But if we do see this thing coming down to maybe 93, 90, 87, that will be a great level to accumulate more at the time. I was also long on crowd, but I am a lot of it. I actually got long here. I had to go through that plunge. I held everything, and then I recently closed, I believe, all of it somewhere up here. I did close all of it or half. I might be holding half. I'm holding so many multiple positions on the equity shares, and so I think I'm all out of it. Let's see. Yeah, so we are dealing with the same logic applies here with SQ, right? That 20 MA is continuing to act as support, and we want to continue to give benefit of the doubt to the buyers. Again, you know, for me to maybe thinking about going long would be to retest that midterm moving average. But if you're long already, like, I would continue to hold. You can, as the price keep advancing, you can unload a little bit. You can take off some, but hold some and then keep riding it. Again, for my time frame, this is not a good level for me to enter long, or I won't short either. But as long as we stay above this, you know, my short-term moving average on the daily chart, I want to give benefit of the doubt to the buyers. Let's go to NVDA. NVIDIA, I just noticed on my daily here, this is a daily chart of NVIDIA. I see kind of a bearish divergence here. What this means is kind of lethargic looking too. It's not a very clean bearish divergence. It's not as potent, but it's there. What this divergence is high. You know, you just saw that bullish divergence on my oscillator on Spider, right? It's in a converse. It's in the opposite direction now, right? It's inverse of that, because you've seen my bullish divergence on that Spider 65-minute chart. This is the inverse of that, but this is daily, so it could take days, maybe weeks before it actually plays out, because it's been forming this bullish divergence for quite some time. You can see that right here. It's been, what, 1 week, 2, 3, 4, like couple months now. So we don't know when this, so what this saying is, it's not a short signal, But it's a signal that if we do see any kind of downturn, that could actually bring this to abrupt sell-off if we do see some selling pressure in the overall market, and if this thing actually confirms, right? I've seen these patterns get nullified before. If these oscillators start to go back up, right? Then it will nullify it, and then price will just get back up like this. So when I see this pattern, I don't have any positions on NVIDIA, but let's say I went long right here. You know, when my midterm moving average started crossing back up, and say I went long here, maybe you could have added here and here. What I would do is I close 1/3 somewhere up here, and then I see that, bearish divergence. I'll close 2/3 of it overall, and I hold 1/3 just in case this thing could continue higher, right? So then I lock in some gain, and then I'll hold about 1/3 of it, so that if it actually plunges hard, you don't mind. You don't mind because you think that, oh my God, like I want to buy more, right? So like, but you don't feel too bad because you already locked in some gain. And then you're almost kind of happy that it pulled back so you could maybe add more, right? But if it keeps going higher, let's say you close out everything up here, right? Then you actually gonna start to feel a little bit bad. You're like, okay, wow, I closed out everything, but now these things keep going higher and higher and higher. So the best way is close out about 2/3 of it, and then hold the remaining so that you feel like you're being part of it as it continues, and you will as it continues to move higher. But when it pulls back sharply, you don't feel too bad, and you'll be happy to accumulate more in some of these levels. That's how I would approach these kind of type of extended hyper flying stocks, right? Never chase, but I will never chase. I used to say this a lot. Market punishes the chasers and rewards the risk takers. Who is this market rewarding right now? People who took the risk to buy in some of these vicinity. You didn't have to call perfect bottom. You could have waited until you see some of these moving average start, flipping back bullish. Plenty of time to go long here, maybe even here and here. Once you see my shorter term, my midterm moving start rising back up. When the price was below it, you say, you know what? I don't know yet. I don't know what's gonna happen. I want to wait it out. And then you could have gone long here and took some risk. Instead of after all this move, I want to go long here. That's just not a prudent strategy. Shopify, same strategy, same logic applies here. I know what Bear's gonna say. Bear's gonna be like, okay, look at that. That looks like an evening star reversal. Well, we did see pretty strong bearish engulfing candles before, right? That's a bearish engulfing candle. That's a bearish engulfing candle. That's evening star candle. But you thought that when SHOP was at 626, you thought it was way overbought, right? And then it got to 835, and you thought, wow, that can't be good. There's no way this thing's gonna go any higher. Well, now it's at that. You see what I mean? You see what I'm talking about? It's when the stock is an uptrend, right? Stock, index, the market, whatever. When it's an uptrend, you have to give it some respect, right? You trying to short this, it wasn't easy. You couldn't make any money shorting it, right? It was difficult there, difficult here, difficult there, right? If you're long, I would, like I said, I would take some off. Like if I go to daily chart, you can see right there, it's getting into overbought. But you know what happened right here? When it's a strong uptrend, sometimes it stays. You see right here? It stayed. We hit overbought here, but it went up more here. You see that? It continued to move higher while my oscillator stayed sideways at the top of its band. When you see that, you know this stock is a very, very strong uptrend. Very, very strong uptrend. This is how the market, this is how the buyers absorb volatility, right? There are some that bearish, engulfing candle there, absorbed it, continued higher. There's another bearish engulfing candle there. We pull back a little bit. Oscillator did come back this time, reset it, got right back up. And we're at the over spot again, but who knows how long? Nobody knows. It's best thing to do, on something like this kind of stock is never to chase again, unless you are short term, you're a scalper, you're doing things very, very short term time frame, scaling, scalping and nibbling and day trading, then you potentially could. But as a long term investor, if you missed it, forget about it. Don't even try to go long here. Minimum, for me to minimum when thinking about it's that, but if I think, minimum, because you can see there's a big move here, and then we touched that, and then we saw another move that could have been potentially some gain you could have gotten there. But after a big move like this, things doesn't get really that easy. But you know how this stock kept going higher though. We did see corrections in between, but after a big move, it gets kind of hectic. But this stock kept going higher anyway. Let's go to Spotify. So Spotify broke out and it just kept going higher. So if you aren't long here or here, it would have been very, very difficult. You would have had to really chase it up here. You really would have had to chase it up there when it was breaking out. And some people do get lucky doing it. I never do it. I never chase. And if you did get chased it and then you were able to get that gain, that's, sometimes it works, but more often than not, it's not a prudent strategy. But same scenario, but looking at the daily, you got a little bit of different sentiment going on here on the daily, because it looks like on Spotify, it seems like we did see a pullback when we do see overbought sentiment. We saw that pullback, at least some consolidation. We saw this pullback, and potentially you may see pullback / consolidation type of move, but these pullbacks were very, very shallow. Very, very shallow, you see. So you see, it's harder to try to short it. It's easier to wait to buy the dip. I don't know where the top is, man. I don't know. I don't know how much it will pull back. I don't see any kind of a sig. Only thing I see, it's getting there. Let's look at weekly. Look at weekly. See, I cannot chase this. I cannot chase it. If it keeps going higher, that's fine. I'll let it go. But I cannot chase it up here. Would I short it up here? No, I wouldn't short it either. Because it could correct through time, not through price, right? Because we've already fully broken out. Maybe this time was maybe a good time to short because this market was still in a bearish territory. You see that? Lower highs, still in a bearish territory, right? We're in a bullish territory now. It's very, very difficult to short it up there, so I wouldn't short that. Let's go to AMD. I was investing in AMD for quite some time. Recently, I closed all of it out. I actually went long here, closed out some, went long here, added more there, and then when we saw a big move, I closed out all of my positions here and here recently. So I have no position on AMD. I'm thinking about going back long. AMD's been stalling here, and we got series. We do have a bearish divergence on the weekly. So you can see this is a weekly chart. You can see that we made a slightly higher high right there, slight higher high. Definitely, that's definitely a lower high there. We saw something similar here, higher high, lower high, correct? Yes. This is a reason why I've closed out everything. When I see weekly divergence, I close out everything. So now I'm waiting for it to correct. If it doesn't correct, let's say if it doesn't correct, because we have to keep in mind, we're still in an uptrend. If it doesn't correct, it decided it's going to correct through time, and we just move sideways like this, and then just break out to the upside, I'm totally cool with letting it go because I have so many other positions that I'm currently long with. However, I have it on my watch list, so I got the gap area here. So I think, good level to buy is maybe somewhere here about 42 or 44. You see my long-term moving average. That's a long-term moving average. This is a daily chart we're talking about. So this by the time this thing comes down, I think the long-term moving average is going to be hovering around at 42 or so. And I think that would be a great level to accumulate there, 41, 42-ish, potentially going higher. Let's go to DOCU. Same logic applies. All the analysis that I've done on SQ, Crowd, NVDA, Shopify, Spotify, same here, DOCU also. DOCU here. Let's look at a weekly chart though, because yeah, that thing is pretty overbought. But you know what? You see that was overbought here back in when DOCU was trading at 66. It hit overbought here. It kept going higher. It kept going up until though we had a bearish divergence right here. That's a sign to get out and then pull back. Maybe you could add more and then ride it. So right now, this thing hit overbought here. Actually, it hit overbought at 137. It hit it overbought at 137, 140, and people are like, there's no way it can go any higher. We're at 190. So just because, especially when you're looking at a bigger term picture like daily and weekly, just because when it actually hits overbought, that is different than analyzing 65-minute chart. I want you to know, because you guys been watching my 65-minute chart analysis on a daily basis. It's different when you're dealing with the daily and weekly. This is why you have to understand how to analyze different time frames, because they react differently. The characteristics are different. Also, different stocks have different characteristics. DocuSign is going to be different than Twitter, right? Like Amazon is going to trade different than IBM. You got to understand the overall picture. When the stock is soaring and flying, it's best get out of the way. Never ever attempt to short. But if you're already long, you took some risk back in March and April. Look at that. When April, this thing came down, that would have been the best time to buy, right? You buy when there's fear in this stock. You don't buy up here. I mean, you could have bought it up here and chased it, but, I rather buy it down here. And then you ride it. And then once you see some signs like bearish divergence or some overbought sentiment, you close like 1/3 when you first saw it, and then you kept on close out another 1/3 somewhere up here, and then now you hold remaining 1/3. So then if it keeps going higher, you can ride it. If it pulls back, you can maybe think about adding back. Let's go to FedEx. I am long on FedEx. I've been a long-term investor since 109. I actually got in here somewhere at 140. I held it. I bought more here. Now, we saw a big gap up, and I'm holding full as of today. And obviously, look, something like FedEx plus FedEx versus DOCU, right? DocuSign, they are two different industry, and they're two different stock, completely different characteristics. FedEx is still in a downtrend, right? DocuSign is in an uptrend. So they're going to behave differently. They're going to completely behave differently. But so you can see my long-term moving average. We still declining. That means in a long-term picture, this is still still in a bearish downtrend. So there's different strategies that I incorporate with my long-term investing strategies. I have growth stocks, and I also have a value stocks. I would put FedEx as of now at this point in a value investing category, because this thing is crashed from here. Yeah, that crashed about more than that, almost 70%. And so you're gonna need tremendous patience with this kind of stock. They're gonna have a lot of whips. And remember, my first entry was here. So and then I added motor here, right? And we have not yet established uptrend yet. How do I know? We got the lower low and we got the higher low still. So this big gap up is definitely going to be helpful. That might be a jump start. We don't know that yet. I'm really hoping to see this gap holds. There's a chance we may come down to retest prior resistance as potential new support like this, and then before going higher. If this thing comes down hit 149, I'll probably buying a little bit more. But keep in mind, it's for my long-term investing strategy. I won't be trading it for a day or two or a couple weeks. I will be holding at least a couple years and continue to accumulate at these lows. And that's kind of how I like to play with my value investing strategy. I'll accumulate somewhere in this vicinity, and then stock starts to get up and get into an uptrend. That's when things get kind of more fun, because what happens is my long-term moving average is going to start to rise higher like this, and you buy the dip here, and sooner or later that thing is going to skyrocket, right? Get into full-blown bullish uptrend like DOCU or NVDA or something like that. That's when you start to close out 1/3, and then you really reap what you've been, sowing, right? Your harvest time might come in the years later. That's how you truly, get your capital appreciation over time, and also practicing compounding by adding on the declines. So that's kind of what I'm thinking on FedEx. I think there's actually some good signal on the, what I like about a weekly chart. We just talked about, you guys remember we talked about weekly bearish divergence. It's not pretty, but that's a lower low and that's a higher low, correct? That's bullish divergence, and this is a weekly chart. So when you see weekly bullish divergence, that usually means it's a major bottoming signal. Doesn't mean it's going to play out right away. Again, patience is required. One last one, Alibaba on this equity side. I've been a long-term investor in Alibaba. Let's see, from down here, I believe. But how I traded Alibaba was I actually was long from here. I closed most of my positions here, and then I started buying here, here, here. I've been adding. I haven't closed out any of my shares since I started getting back in around, late 2018, early 2019. Bought some of these dips, and then I didn't buy this dip, but I bought this dip there. And then just this week, yesterday, I believe, or just a couple days ago, I added more in that level. What I like about it is when you go to weekly chart here, we're not overbought either, but on the weekly chart, I want you to move out a little bit. You can see you can look at that as a kind of, actually monthly looks better. Let's go to monthly. Let's go to monthly here. So you can see on the monthly, right? That's the level right here. That's a prior resistance you support. That's a prior resistance you support. And I'm not saying this market is going to do this, but what I'm saying is that's how this market cultivates an uptrend. That's a low, that's a higher low, that's a higher low, that's a high, that's a higher. Do you see what I'm saying? So that's what I mean. Like you want to able to utilize daily, weekly, monthly, and then zoom into daily chart, and then zoom into 65-minute chart, and you can really plan your strategy, how you want to trade this. So Alibaba, I'm bullish. I'm bullish in Alibaba, and I think we got some move to the upside there. I mean, looking at the daily also, not oversold. We're not oversold yet. We're not even over. I mean, we haven't even begun to cross back up yet. And with this gap up, you can hold this gap up. I think there's a good chance it has a lot of room to move to the upside. Let's go to gold. Gold is holding up here after it's kind of slightly breaking out. Let's see. This is how, we talked about, I think we've been kind of talking about bearish divergence, right? We kind of talked about this, right? It's starting to, this is how, price moves sideways. Instead of correcting through price, it corrected through time and it nullified it. It nullified a bearish divergence. However, my other oscillators are still something here. On this oscillator, we're not, but we still got kind of a bearish divergence going on this. That's why I got different ones, just so there's some mixed signal there. And again, you guys know that I'm still long since back in 130s, and I added more here, and so I'm actually still holding full because we're on a bullish mode. I mean, this thing broke out of the that base, 6-7 year base, and we're on a full-blown bullish stage right now, meaning any kind of pullback will be a gift for you to buy that dip. When it's a full-blown bullish, you don't know how long that's gonna last. It could last a year, it could last 2 years, nobody knows, but I want to continue to give benefit of the doubt to the buyers in the long term. Bitcoin, yeah, that thing, I'm still not long on Bitcoin. Like I said, I don't want to buy anything long. I don't want to get into any long positions when I see a stock or index is in a downtrend, or Bitcoin in this matter. Bitcoin is still in a downtrend. High, lower high. That's a lower high. We talked about it needed to get to about 13, neutralize it, pull back. Remember we talked about Spider. It had to come back up here. Spider, remember we did that on 65 minutes. We talked about this. We got up here, pulling back. That's what I was looking for on Bitcoin. And then pull back and then do that. And I might have tried to buy it here and then go long here again. But with the lower highs, this is a fake breakout to the upside, little heads up, a little head fake there. And when I saw that, I knew that this thing was going to be coming back down. We talked about it every weekend. So now we're back at the gap area. I wouldn't be surprised to see filling the gap and then possibly a bounce, but it's still a hectic situation because we're still in a primary term downtrend, lower highs and lower lows. I do not want to be long on Bitcoin right now, and I have no position until I see Bitcoin is turning around. Trend is reversing, trend is establishing, and I want to see some at least early signal of a higher lows and high. We don't have any of that. So until I see that, I'm not gonna try to go long here yet. We don't even have any kind of a major bottoming signal like bullish divergence or anything like that on the weekly. We just still in this choppy kind of long-term downtrend environment. So I wouldn't go long. It would have been good short though when you saw that head fake there. It would have been good short to maybe if you're a swing trader or something like that. But so I want to continue to be bearish, and I don't want to get long at this point. So that's it. That's everything there for you guys, and let's see how the market plays out going into next week. I am potentially expecting maybe a short-term pullback or something like that, but market is doing a great job. So I think bull's objective going into next week is to fill this gap. Once that gap gets filled, expect some volatility, unless I have to always say this because market has been doing some, giving us these surprises, right? Unless, right? This is a rare scenario again, but this entire week, this market has been doing my rare scenarios almost every day. This is another rare scenario. Another rare scenario is this, and I'm going to end the video with this. Monday, Tuesday, this thing gets back up right here. And this thing gaps up above it and turn this into a island. Basically, if this thing gaps back above 319, 320, this entire month and a half or 2 months of this price action, what is it? About a month of price action, this entire thing, the entire box, it's gonna become island bottom. And that's some big island bottom. You see something like that, we're going to all-time high. We see something like that. This thing somehow, we get up a little bit and then start gapping up on Tuesday or something like that, right? Let's see how much of a gap. I don't think from here to there, there's, that's 2% gap up if we just do it on Monday morning. That's a big gap up. But it could be where, market could come down and then get up and then gap up. But anyhow, sometime next week, if we see this thing gapping up about 319, 320, this entire thing is going to turn. That 1 month of price action is going to become island bottom. The bigger the bottom, the bigger the move to the upside. If we see, and this was already like pretty big size island bottom, island type reversal. We turn back this into an island bottom, we're going to all-time high. That would be the best case scenario for the buyers. Obviously, bears, you want to make sure this doesn't get filled. This is the only weapon you have right now, bears. This is the only weapon you want to utilize this and start bringing it down, gap below 306, but a lot of supports in this vicinity. I'll come back next week and we'll reassess the situation. You guys enjoy your weekend. Happy 4th of July and good luck trading next week.